It took just days for banks across Wall Street to put together a $25.5 billion financing package for Elon Musk's bid for Twitter. This is usually an exercise that will take weeks to achieve. They just did it in a few days. That sort of speed really surprised the advisors of Twitter. So one person involved in the debt financing explained that the due diligence was easy because there was none. There was no due diligence. Not in the classic sense of it all. There was no due diligence really as such. The $44 billion Twitter buyout shows how comfortable the Wall Street machine has grown more comfortable with debt and its associated risks, particularly when the person in need of cash is one of the wealthiest persons in the world. It also raises questions about how far lenders are willing to go to win business and lucrative fees, and what might happen if they misjudge the risks. At the center of the whole of this debate is the value of Tesla, the electric car maker worth $913 billion that Elon Musk leads. So let's see what's going on with Tesla right now. The market for the 29th of April 2022 is opening in a few seconds, so it is up 2.79%. Okay, the market is open now. That's good. So at the center of all of this debate obviously is because Elon Musk is relying on his stake in Tesla to borrow this 25.5 billion, and indeed probably all of the 43 billion, or probably half of it. We'll see what the case will be. So Musk's stake in the company, in Tesla, is worth more than $150 billion, and part of those holdings were used to secure a margin loan that makes up just under half of that $25.5 billion of debt that the banks have put forward. That wealth eased concerns of many lenders, which accelerated due diligence processes at the behest of Morgan Stanley, Elon Musk's financial advisor and one of the biggest lenders on the deal. One lender said that for them, it was not tough to get their arms around the margin loan. So lenders are still staring down one red flag, though. It is not clear how Musk plans to raise the remaining cash needed for the deal, which could reach up to $21 billion. There is also uncertainty swirling around the value of Tesla shares, should its largest owner significantly cash out. Underwriters' nerves are already being tested. Tesla stock registered its largest daily loss since September 2022 this week. This week is between the 25th of April and the 29th of April, after the ink dried on the takeover, knocking out 126 billion from the company's valuation. So I'm going to show you that right now. I'm going to show you that decline. That decline occurred yesterday, day 28. See that this decline here between $1,000 and where it closed yesterday, it's 877.44. That's marked. This decline is equivalent to 126 billion dollars. So the share price will be closely watched by Musk lenders, since it's their collateral should he default on his loan. Bankers said that the security gave them confidence that Elon Musk and Twitter will be good for the debt, given that the billionaire is unlikely to want to part with millions of Tesla shares. So that is what they are relying on, amongst other things. So what could go wrong? Asked a third person involved in putting together the debt portion of the deal. And he said, he is literally the richest man in the world. The loan is a small portion of his overall wealth. A banker close to Musk said. There's also $30 billion of equity plus or minus underneath all of these things. So they are confident they are going to get their money back. So Musk could sell between 15 to 20% of his Tesla shares, but that simple move would probably lead to additional selling by him to cover 3 to $4 billion in capital against taxes, according to experts who have analyzed all of these things. So, in a letter to the chairman of Twitter, Elon Musk has said that he's exploring how to allow some existing shareholders to invest in the company once it goes private, once the deal is completed. He has also held talks with private equity group Thoma Bravo about teaming up on the deal, which could reduce the amount of money he has to stump up, and also lower the number of shares number of Tesla shares he has to potentially sell. Because all of those things are really good. If he doesn't sell a lot, then it's would able to it might sustain. It wouldn't. Because the more if it begins to sell, it will it will turn into a selling pressure. So, but also yesterday, we also found out that there are questions that are now being asked. There are questions now being asked. See down here. Tweet according to this is according to Financial Times. This is their piece we read out for you. Musk's Twitter financing tests Wall Street's mettle, and then Fortune is saying did Elon Musk bite off more than he could chew. This is as it concerns Twitter's earnings disclosures, and we have it that Twitter admitted to overstating its audience figures by almost 2 million users for around 3 years, as it reported its first quarterly results since the social media company agreed a $44 billion buyout from Tesla from Elon Musk. So it is the second time that Twitter has miscalculated its user numbers after discovering in 2017 that they had a similar error. That a similar error had gone unnoticed for 3 years. The mistake was revealed just days after Twitter agreed a leveraged buyout by Elon Musk. The entrepreneur has hinted at plans to reshape Twitter's business model, which relies on advertising for more than 90% of its revenues. So down here as well, we are seeing that people are asking who financed Elon Musk. Okay, it says additionally he secured roughly $25.5 billion in debt financing through Morgan Stanley Senior funding and other firms including Bank of America, Barclays, MUFG, Société Générale, BNP Paribas, and Mizuho. Okay, so see what you make of all of these things, and as we speak, Tesla is up $4.15%. Okay, and thank you very much for watching this video.